Ashok, the first question is that the jewelry revenue that went up by almost 28% in the 9 months FY26. What are the numbers or what kind of ending we can have in the year, and for FY27 also what would be the target?
Yeah, 9 month is 28%, quarter three is 40%, Sharad. Very good and satisfying quarter we just concluded. While gold prices were on a secular, extremely rising trend, in January they became a bit volatile, which might create a little bit, in consumer mind, wait and watch issue. But January month has been also very satisfying. So we don't see momentum slowing down. Overall, 28% is there, but very difficult to tell what will be the full year. But January has been good, and we see uh, things are panning out well. Consumers are out in the market. We also have Festival of Diamond activation, which we do typically in January, February month, which is also going well. So we think good growth for the full final year.
And Ashok, have the margins and the competitive intensity for the jewelry business bottomed out, and what's the target we're looking like for the company?
Uh, no, I would say competitive intensity has also not come down, but we have been doing our execution with great focus, and all the teams are doing great work across businesses, not only in jewelry. Margin is a function of gold price increase. And in the rising gold environment, I would not say jewelry margins have bottomed out. If the gold continues to rise like this, it has two, three ways impacts the jewelry margin. One is the studded diamond jewelry margin goes down because the gold material content in terms of value goes up. And typically people move towards more investment grade jewelry where the gold coin salience goes up in our product mix. These two elements have in a way, uh, impact on margin on the negative side. Uh, while we take many steps to kind of offset this, one is, of course, through operating leverage, focusing more on growth, but also introducing products at various price point, introducing 14 karat, 18 karat gold jewelry, even 9 karat modern gold has been introduced. So some of these things help us offset what gold price do on the negative side. And,
Ashok,
and, uh,
right.
and you see the outcome that way. Yeah.
Right. And of course, the gold prices are on the higher side. Is there any scope for a reduction in the making charges? And if yes, what could be the impact on the margins?
No, I don't think we are taking that as a lever. That we sometime our activations are there, but those are defined activation. Like before Akshaya Tritiya, before Dhanteras, we do come up with some making charge related scheme. But I think we are focusing more on gold exchange program, which helps buyer to make a choices on irrespective of where the gold prices are there, and bringing more fresh collections, more engagement, more campaign, marketing communication is the way to kind of engage with customer and enhance their desire about jewelry rather than promoting discounts on making charges or anything else.
All right. But the target studded ratio, that what would that be? Because in this quarter was 26%. Last year on year basis, it was 28%. It has actually come
Right.
down.
Yeah.
So what's your view on that?
So essentially, Sarad, this is an outcome. We kind of keep working on both the lines. The way gold prices are going up, and diamond prices are certainly not in that league. They are not going up. So even if the buyer growth is better in studded jewelry compared to gold jewelry, so number of buyers or growth in buyer, we have been reporting for last few quarters that studded buyer growth is still there, small single digit. Buyer growth in gold is almost flattish or sometimes negative growth is happening. But in spite of that, the way gold prices are going up, these mix and ratios which you are looking at are not in favor of diamond jewelry. So that's likely to continue.
Hmm. That's pretty interesting. Ashok, but let's move on our conversation and let's go on to the LGD part, the lab grown diamond business. You have launched a beyond product as well. And I just wanted to understand, what's the investment chest, the revenue potential looking like, for the next 3 to 5 years, and any important customer trends which you are gathering?
So, we have been studying LGD space and for some time, and finally we took a call that while studying is one part, actually, retailing it and connecting with actual consumers who are buying those products will give us more insight. And I would say the first 8 to 10 stores which are likely to come in next 4 or 5 months would I would not consider that as a pilot, but it is more exploration, more deep study, and based on the outcome of those 8, 10 stores which will come in the next 4 or 5 months, we will decide that how accelerated further ramp up would happen. So there is no 5 year plan in mind at this point of time. Right now, we are focused that how do we kind of do this next 4 or 5 months and keep gathering more and more insight about this product. We so far what we have seen that natural diamond and lab grown diamond both are coexisting, and they are kind of meeting different need state of sometimes same consumers, sometimes different consumers. uh, we have not seen any major substitution forces working here. So we will study more for next 4 or 5 months through 8, 10 stores, and then decide on how rapidly we want to ramp it up or what should be the pace.
So it's of course a work in progress when it comes to LGDs for Titan. But what's your outlook on the expansion plans globally? The current revenue is roughly 2296 crore rupees for 9 months FY26. Your views on the international expansion now?
Uh, in between, there was a little bit cloud on US expansion while we opened 2 stores in US, but we were slightly going slower. But one is that now the tariff things should be is looking like sorting out. With 18%, it is still doable. We already had also some supply chain solutions also, which could have allowed us to sustain and grow US business. So I think we are going to look at some good rate of expansion. We are already 24, 25 store going towards, I would say, 24 to 50 stores in 2 years time between US, GCC and Singapore. Canada is a new territory which we have now decided to open up. So maybe next financial year you might see 1 or 2 stores of Tanishq uh, mm, kind of
All right. And
getting.
Ashok, the last question, the current market share, and what kind of a target you can expect, next 6 months or 12 months if you have put any.
Market share is also again, Sarad, is an outcome. We are currently, our estimate suggests we are 8% ballpark with the portfolio of brand, which is Mia, Carrot Lane, Zoya, Tanishq, and internationally Tanishq and now Damas coming into our fray. But if we talk about Indian market with these 4 brands, I think we cater to widest customer choices at widest price points and design language. We should continue to grow faster than industry and continue to gain market share.